Hi, I'm Tom Lydon, co-founder of Iris, and I'm here with Jessica Bush, who's portfolio manager at Principal Global Investors. Great seeing you, Jessica.
Nice to see you too.
So there's a lot going on in the markets today. We hear a lot about the Fed, but a lot of it's focused on inflation. Let's talk about that. How can advisors focus on inflation and also make portfolio decisions at the same time?
Yeah. Inflation is interesting because we believe for the first time in probably 2 years, advisors are really thinking about inflation and are able to talk about it with their clients without being laughed at, essentially, because it is becoming more topical. However, what we see for a long-term trend is that inflationary pressure is going to remain relatively modest. And that really is driven by the fact that there is still excess capacity in the global economy. So you look in the US, we've seen an improvement in growth and certainly have continued to see very strong labor trends. But globally, we still have, again, slight improvement in Europe, but very high unemployment still. You're still looking at about 9.5% unemployment in Europe, and then just excess capacity in other places. Think about Asia, in China specifically, the tremendous amount of investment that we've seen there in the last few years, and they're really continuing to invest, even though their growth is slowing somewhat. So overall, excess capacity is going to keep a lid on inflation pressure.
Interesting, because really when you look at inflation domestically compared to globally, as you say, it is different. We've got low unemployment right now. We've got commodity prices kind of more at certain levels,
Stably,
right? We're seeing wage growth as well. We're seeing real estate kind of somewhat stable.
Yeah.
It's creeping up here in the States, but you're saying because we're not seeing the same overseas, that overall global inflation numbers will affect decisions by the Fed, for example?
I do think that they are going to pay attention to, and certainly Janet Yellen has indicated as much, she will pay attention to global financial conditions in her ongoing assessment of the health of the U.S. economy. So I do think that as long as we continue to see excess capacity, she's going to continue to have that slow and moderate runway as she normalizes rate policy.
So it's tough for the Fed to even have a finger on the pulse. What about the average advisor? How do they make sure that they're ready when inflation does in fact kick in?
Yeah, I think that's a really interesting question, because our approach is to say, predicting inflation is really challenging because it's that unexpected inflation that really hurts investors.
Yeah.
Expected inflation is really taken into account in the pricing of most financial instruments, but so unexpected inflation, how to handicap for that, how to prepare for that, it's hard to figure out what the source is going to be at any given point in time, because often it comes from geopolitical risk or some sort of a supply shock that's really hard to predict. Of course, it can be caused by demand too, which in some ways is a little easier to handicap. But if it's unknown, but we know it can be harmful, we believe the best approach is to have exposure to a variety of asset classes that have positive sensitivity to inflation change. So we look at a broad basket, for instance, of real assets that can perform well in different economic environments and can have that response to inflation that you need in a portfolio.
So Jessica, how do you folks help advisors incorporate the strategy in a portfolio?
Yeah, the main thing we do is we provide a broad basket of real asset exposure, which we believe over the time helps you be more consistent in delivering that inflation protection that could be unknown and hard to handicap, but also delivering the total return investors need and the diversification that investors need. So define that real asset universe broadly and look beyond commodities, look beyond tips, look to other sectors of the stock universe and other sectors of the fixed income universe that have some inflation sensitivity that can really help investors.
Yeah, give me some examples.
So for example, timber stocks is an area that we have liked. Over the long term, they have inflation sensitivity, but they aren't completely tied to the energy part of the commodity cycle. So for that's been a really important theme for us in the last 2 years. Those stocks in general have come back as inflation expectations have increased on the back of improved housing, which you had noted earlier, and just different consumptions trends we're seeing, especially in the emerging markets. So that's an area that has done well for us year to date.
So you folks incorporate this into a mutual fund, and the name of the fund is?
Principal Diversified Real Asset Fund.
Excellent. Well, great. Jessica, thanks so much for your time. I learned a lot today. Thank you.
Yeah, well, thank you.
Thank you.